We'll start our webinar. First, I introduce myself. I'm Abdunil Roy, and I've been working with Madan, chartered accountant, for the last 6 months. Prior to that, I've been working with the Big Four for the last 9 years. So it's a great opportunity, and thank you for everyone for your time for the webinar and the presentation. So today I'll be presenting a webinar on the US sales tax. So from the last year, everyone have seen that it has become a very big topic. After the court case that we know, it was against the South Dakota and the Wayfair. And from that time, we have been hearing a lot of our Canadian client about the US sales tax. When should we be collecting sales tax? What is US sales tax? In this webinar and presentation, I'll try to explain you what is US sales tax. When do you need to have a US sales tax and everything. So the contents I'll be covering in this webinar or presentation is what is US sales tax or what is basis of US sales tax. What are the steps of collecting the sales tax? Which state impose and which state do not? Sales tax rate, US sales tax nexus, or in which state we have to pay the sales tax. And voluntary disclosure agreement, or you can say as the voluntary disclosure program. I'll be explaining all the topics in the further slide. So what is US sales tax? So sales tax in the US are basically the tax placed on the sale or lease of goods or services. The most important thing is that in US the sales tax are governed by the state tax authorities. There is no national level sales tax. That means each and every state has different sales tax rule and sales tax rate. No sales tax rate at the national level. At this present moment, 45 states, including District of Columbia, the territories of Puerto Rico and Guam, they impose the sales tax. There are 5 states that doesn't impose any sales tax. The state tax also differed on the selective goods and services also. It's similar like the Canadian provinces also. Like in Canadian provinces, we have the sales tax rate. US also have a sales tax at the state level. But Canada has a sales tax at the national level, whereas the states doesn't have a sales tax at the national level. Whereas in US, there can be a sales tax not only at the state level, but at the city level, county level, district level, or local level. So that means if the state tax has 5% sales tax rate, there can be a district level state tax, there can be a local level sales tax, there can be a county level sales tax, which can add up to 7%. In Canada, when we sell any product to another Canadian province, we just add the sales tax at the seller level. Suppose if I am selling from Ottawa to British Columbia, we'll collect the sales tax at the British Columbia level because the destination is British Columbia. Whereas at the US, it's not that quite simple. Because in US, there is a term called Nexus, which helps us to see the sales tax rate. I'll be explaining you detail in the further slide. Now, the most common questions we hear from the small business when do I need to collect the sales tax? The most important thing is that the responsibility of collecting the sales tax is at the merchant level. It's the merchant's responsibility to collect the sales tax and pay it to the state level, to the state tax authority. Indirectly, the sales tax is the pass-through entity which the merchant collect from the buyer and pay it to the state tax authorities. So, first step in determining your sales tax obligation is your jurisdiction. It is a very important thing because presently at this moment 5 states doesn't impose sales tax. Alaska, Delaware, Montana, New Hampshire and Oregon doesn't have sales tax. Other 45 states have the sales tax, including District of Columbia. But Alaska doesn't have state sales tax at the state level. They have sales tax at the city and the county level. Now come the taxability. Taxability means not all products are eligible for sales tax. Basically, non-essential and tangible products are essential for sales tax. Essential products are not eligible for sales tax. That means clothing. Clothing is free from sales tax, but accessories, jewelries, bags are subject to sales tax. But clothing includes luxury items also. For example, New York says, if you sell any clothing above $110, you are subject to paying the sales tax. Beyond 110, below $110, you are exempt from paying the sales tax. Now come fresh and packaged food like vegetables are not eligible for sales tax. But when you prepare that food and sell it, then it is subject to sales tax. Then come prescriptions, medicine, over-the-counter medicines are all tax-free and you don't have to pay sales tax. Now we come to the next point, that is legal compliances. Sales tax in US is vast. It has more than 10,000 jurisdictions. So for the small sellers, it is very tough to maintain and see how can we keep the track record of our sales tax and all. So it is better to have a proper compliance team who can monitor your sales tax. But if you're doing any online business nowadays, if you're selling any product through Amazon and all, Amazon has made it easy and they keep the track record of your online sales. In which state you need to pay the sales tax, in which district you need to pay the sales tax. So Amazon has made it. For other seller who doesn't do any online business and all, they need to have a proper compliance teams who can help them monitor the sales tax and they pay their sales tax at a regular basis. Because it is very important to pay and file the sales tax on a regular basis and to be compliant. Now the next point, after you found out that you are operating in jurisdiction, you came to know that you are doing business in 45 states, you come to know that you have what type of item you are selling, whether it is an accessories or it is an clothing or it is an luxurious items, then you need to register with the state tax authorities. For example, if you are operating in Pennsylvania, so you need to register yourself with the Pennsylvania state for the sales tax authority. State department or state revenue department are the main are the main responsible bodies who take care of your sales tax authorities. For registering in the sales tax authority, the first thing you need is employer identification number or business tax ID, or in some cases you need both. Then you'll need the official business contact information or address or registered mailing address or date of starting of your business, all the general information. The third thing is NAICS code. What is NAICS code? NAICS code helps helps the state tax authority to determine your business activity. For example, for real estate, we have a separate business activity code, NAIC code. For marketing companies, we have a separate NAIC code. For online sellers, we have a different business NAIC code. For manufacturing, we have different NAIC code. Basically, this NAIC code helps the state tax authority to find out what type of business you are doing. After you have all the information with you, then you need to register yourself with the state department. It is very easy. After you find out your jurisdiction, you are doing the business, you just have to go to that state. There is an online portal in every state. You can Google it also, and you need to update your general information there. In this way, you will be able to register yourself with the state department. Or there are few states who can register by email also. You can visit the website. You can just get the information, what all information they need. You just have to email them, and they will register for yourself with the State Department of Revenue. After you register yourself with the State Department of Revenue, now it's your responsibility to collect the sales tax from the seller and remit it to the State Department of Revenue. Timely file your sales tax return without missing the deadline. Next, we come to the how can we collect or calculate the sales tax. As I mentioned earlier, the US is a mixture of thousands of locals, state, local, and district levels tax. But for the online business, the Amazon or any other website, they have made it quite easy for them. For the e-commerce business, they only take care of all your detail in collecting the sales tax and everything and paying it to the state revenue. So for collecting it, but it is always important to you understand how the sales tax are getting collected. What are the method of the taxation of collecting the sales tax? There are basically two methods of collecting the sales tax. One is origin-based destination. The other is destination-based taxation. About 11 states, including Texas and Illinois, they impose sales tax at the origin-based level. Origin-based means, suppose if you are if you have a warehouse in Dallas and you sell it to El Paso in Dallas. So you need to collect the sales tax on the basis of Dallas rate because your origin point is Dallas. The other example I will give you is regarding the Pennsylvania. Pennsylvania also has an origin based, means from where the goods are shipped, we need to calculate the sales tax on the basis of that origin point. For example, if you sell from Carlisle, Pennsylvania, it has a flat rate of 6% sales tax rate. So if you sell it to another place, you will be charging it at the rate of 6% because your origin point is Carlisle, Pennsylvania. Now, the other example, if you have a warehouse or you have a business in Philadelphia, Pennsylvania, then you have and you sell it to other places, then you need to collect the sales tax on the rate of the origin point, that is Philadelphia, Pennsylvania. But Philadelphia has an additional 2% of local rate. So 6% Pennsylvania sales tax rate plus 2% Philadelphia rate. So you will be collecting sales tax on the basis of 8%. Origin based is quite simple as compared to the destination based. Destination based, on the other hand, most of the state they follow is where the will collect the sales tax on the basis where the product is getting delivered. So basically, if you are doing business in South Carolina and you sell your product from Columbia, South Carolina to Alabama, then you'll be collecting the sales tax on the basis of Alabama rate. So destination based always calculates sales tax at the destination point where the ship where the product is getting delivered. But the main question comes, and the very important thing is that what about the online sellers or the remote sellers? Online sellers will have a different and lot of, they are delivering in different states. For remote sellers and online sellers, only 3 states, that is Arizona, New Mexico, and California, follows origin based. All other states they follow destination based sales. So I give an example to you. You sell via Amazon FBA and you live in Georgia, but your products are shipped to Tennessee. Tennessee is an origin based, but as you are selling, as you don't have any office in Tennessee, you are just selling your product from Georgia to Tennessee. As you don't have any office in Arizona and Tennessee, so Tennessee will consider you as an online seller or a remote seller, and they will charge you on the basis of destination based sales tax. So though Tennessee is the origin based, as you are remote or an online seller, the rule changes and Tennessee follows the destination based. So it is very important. Only 3 states, Arizona, New Mexico, and California. California, on the other hand, is bit complex. California says California sales tax at the state level is on the origin based, but California district, city, county are at the destination based sales tax. So for the online sellers, all the state maximum states they follow the destination based sales tax. After you have registered yourself with the state, after you have found out what method you will be using for collecting the sales tax, whether it will be origin based or destination based, what product you are selling, now you need to file the sales tax, your sales tax return on a timely manner. Business sales tax, but for the online seller it has become quite easy nowadays. For the e-commerce and the accounting suits, they only automatically file the return for you, but it's the merchant's responsibility to know and file the return on a timely basis and make the payment on a timely basis so that you are being compliant. Now there is another very important term, zero return. What is zero return? Suppose last year you have calculated, you have been selling your product in New York and you have filed your return in the New York. But this year you didn't sold anything to the New York and you didn't have any nexus in New York. But New York says, as you have registered yourself with the New York Department of Revenue, though you have not done any business, though you have not sold anything, but still you need to file a zero-based return. So I will request everyone to check if you have registered yourself with the state. If in the current year you don't have any nexus or you don't sold anything, but still whether you need to file the zero return or not. If you fail to file the zero return, then it will be a late fee and penalty for you. Now comes which state imposes sales tax and which state does not impose sales tax. As I said earlier, 5 states, Alaska, Delaware, Montana, New Hampshire, Oregon, does not have to file any sales tax or you don't have to collect any sales tax. Other 45 states, including District of Columbia, need to have a sales tax. Sales tax rate. 45 states, including District of Columbia, collect state-wise sales tax. Local sales taxes are collected in 38 states. The, the, the data is from January 2009. At this moment, Tennessee is the highest of collecting the sales tax rate, it includes the local rate also, 9.47, then Louisiana, then Arkansas. There is a file where you can see the rate. For example, Alabama. It has a state tax rate of 4%, but its average local tax rate is 5.14%. So your combined rate is 9.14%. Maximum local tax rate is 7%. So if I see Massachusetts, its state tax rate is 6.25%, but it doesn't have any local or district level tax rate. Same as Maine is 5.50, but no district, no local. Louisiana, state level tax rate is 4.45%, but average district level tax rate is 5%. So its combined is 9.45. So if you see that at state level, the tax rate is less, but the average district level, the tax rate is high. The highest district that earns the tax rate is 7%. So if you see, Alaska doesn't have the state tax rate, but it has a local tax rate. Its average is 1.43%. So this chart helps you to see the combined average sales tax rate. So what I have shown you in the PDF also, like North Dakota is 6.85% is the average tax rate. Nebraska is 6.85%, Colorado is 7.63%. These all are the states. Oregon, Montana doesn't have any sales tax rate. Now the most important thing we hear, when do Canadian business need to collect the sales tax? Or what is US sales, or what is called Nexus? Nexus is basically helps in finding your filing the return. For example, when you file for example, if you have a rental property in Florida, you know you have a physical presence in Florida, so you need to file the state tax return with Florida. Which helps you in finding your presence is called Nexus. For example, if you're manufacturing in Manitoba and crafting in Saskatchewan, but you are selling your product in states, though your business is in Canada, it doesn't mean that you don't have to pay the sales tax. As you're selling the product, it may create a nexus for you. For that, you need to pay the sales tax. So the first criteria is the physical presence or the business location. But in the online business, we cannot always go for the physical presence. For example, if you have a store, office, or a warehouse in states, then you create a physical presence in that state. Suppose you have a warehouse in Georgia, then it creates a nexus for you. You have an office in Canada, but you have an employee who visits in United States for promoting your product. It might be around couple of days or in a month, but as your employee visit in the States, it may create a nexus and you have to file the sales tax return. In this modern world of Amazon, we see that a lot of our products are kept in Amazon FBA or inventory store, and from there the products are sold. So if your inventories are stored in Amazon FBA, it also creates a nexus for you. So you need to see whether you have a physical presence or not. Physical presence can be a store, warehouse, an employee of yours who visits, might be for a couple of days in states, but still it may create a nexus for you. Nexus doesn't mean only for physical presence. It can be a affiliated marketing nexus. What do you mean by affiliated marketing nexus? Affiliated marketing nexus means I'm doing business in Toronto. I have a marketing company. I've had a marketing company in US. I told them, you promote my product, the number of product you'll sell, I'll pay you a commission for each sale of the product. Then it creates a nexus for you because the marketing company in US is promoting your product, which is creating a nexus for you. For instance, if you sell your cowboy hats from Winnipeg through an agreement of Cowpoke Journal. So the Cowpoke Journal, and in return you give a commission to the Cowpoke Journal. Then it creates a nexus for you. But for the online sellers, we have another term that is called economic nexus, which is very important. The case that was done that went in last year between the South Dakota and the Wayfair. Under this, the Supreme Court has said you might not have a physical presence, you might not have an affiliated marketing nexus, but if you have an economic nexus in state, then you need to file a US sales tax return or you need to collect the US sales tax. So what is economic nexus? Economic nexus is basically suppose if I am selling through Amazon, but I am based in Canada, I am selling my products to Tennessee or Arizona or Georgia. So the state says if you sell this number of dollar in my state, though you don't have any physical presence, you need to give sales tax. So if the amount ranges from $10,000 to $5 lakh. I'll explain you in a proper way. For example, Arkansas, it says you might not have a physical presence in my state, but if you sell more than $1 million, $1 lakh in my state, then you need to pay the sales tax. Connecticut, it says if you sell more than $1 lakh or 200 or more separate transaction in a year, then you need to pay the sales tax. So economics nexus tells every state has says that if you sell more than this amount in my state, then you need to pay the sales tax. Colorado, it says more than $1 lakh in my state in a year, you have to pay the sales tax. So different state has given the different range for the online sellers to sell their products. California, it says $5 lakh. If you sell more than $5 lakh in a year, you need to pay the sales tax to me. This is called economic nexus. So what we have seen, what are the situations that create sales tax? Physical presence, affiliated marketing nexus. If you're selling your product in a trade show or craft show, then it creates a nexus for you. Or economic nexus. Economic nexus means every state has says that if you sell more than this amount in my state, then you need to create a sales tax. You need to pay a sales tax in my state, and this is very important. But there are some exceptions in filing the sales tax return, like if you are selling any wholesale product or sale to any non-profit organization, then you don't have to, or tax exempt organization, then you don't need to pay any sales tax. Now, how to get sales tax compliant? You have registered yourself with the State Department of Revenue. You have calculated your nexus. You found out your nexus. Then, now the thing is timely filing the return with the State Department of Revenue. You always remember to be compliant in filing with the State Department of Revenue. There are a lot of softwares you can find in Google or accounting firm who can help you in filing the sales tax return for you. But you need to be always be compliant in filing your sales tax and paying your sales tax, because the State Department are taking this very serious after the last year. Before last year, the online sellers were not paying the sales tax. But last year, after the case of South Dakota and the Wayfair, when the Supreme Court has said, South Dakota has says that if we have an economic nexus, and after that, the State Department has become very serious in filing requirement for sales tax return. Now there is a program called voluntary disclosure agreement or voluntary disclosure program. What is the voluntary disclosure program one, or what is the voluntary disclosure agreement? After your nexus determination, it's your responsibility to collect the sales tax from the buyer and pay it to the state tax revenue. When you register, as I said earlier, when you register yourself with the US, with the State Department of Revenue, you need to give the information of doing business from when you are doing business in that state. For example, you are doing business in that state from 2015, but you have filed the return in 2018. So you found that you should have filed the return from 2015. So in that way, you can come into an agreement which is called voluntary disclosure agreement or voluntary disclosure program, where you can request the State Department that I will file my return from 2015 to 2017 under the state tax voluntary agreement. Please don't charge any interest, penalty, late fees on my return. So in this way, you come into an agreement with the State Department for filing your past returns, which you have not filed. BDA, the most important thing is that BDA always helps you against the criminal offenses. if you beforehand, if you register yourself with the BDA program, then you are compliant with the state. Otherwise, if states come and catch you that you have not filed the return for the last these years and all, then it might create a criminal offense for you. So it is always to be safe and see from when you are doing the business, and you found that you are doing the business, so it's always better to go for a voluntary disclosure program. Different states have different rule around the voluntary disclosure agreement. It's quite easy. Either you can call up the State Department of Revenue or you can visit the state webinar. What is there? What all the information you need in filing the voluntary disclosure agreement? What information? What are the things the state need? It's very easy. You can find this in the state website, or you can call up them and they will answer your question regarding the voluntary disclosure agreement. The most important thing, if you are filing the sales tax return but you are not paying the sales tax to the amount to the State Department of Revenue, then it will not come under voluntary disclosure agreement. Failure to pay the amount is a criminal, is a, you will always be responsible for a late fees or penalties. So if you have filed the return from 2015 to 2018, but you have not paid anything to the State Department of Revenue, then it will not come under voluntary disclosure agreement. The state will say that you have filed the return, you know what is your liability, but still you are not paying the amount. So you have to pay the penalty on the late and the late interest fees. So this is the end of the webinar and the small presentation.